Hey, good morning. This is Mayor Valensky with Driving Markets. I hope that the volume is high enough. Let's kick off and let's see what was driving markets yesterday and what will be driving markets going forward. Okay, so the main issue here is crisis in the banking sector. So what happened is that all the banks effectively have become frightened by the Silicon Valley Bank scandal, Signature Bank being taken over by the US Treasury or the regulator in the US, and obviously earlier on was the Silvergate Crypto Bank. That's all old news. Then came out the news of the First Republic. They had problems, got 30 billion from the top tier banks, and that seemed to sort of calm things down. Then came out Credit Suisse. Now the Swiss authorities today have stated that Credit Suisse collapsed because of the US banking crisis. That's not really the case. They're not telling the whole story. Credit Suisse has been in a lot of problems for many years. What's happened is that the banking crisis has frustrated and brought to a boil the trouble within Credit Suisse. Okay, and therefore that caused investors and traders and analysts to look at which banks were at risk, and one of them was Credit Suisse. Now Credit Suisse was sold for 3.2 billion to UBS. Old news, nothing new there. But really the value of Credit Suisse was far greater than $3.2 billion. Okay, the value of Credit Suisse was more in the region of around about $25 billion. But there was around about $17 billion in ATIs. ATIs are additional tier 1 lending that banks do. It's a slightly higher risk lending or higher risk of investment, but the yields are reflective of that. The yields are relative to the risk, so that higher yields. So those investors, those traders and those funds that invested in the Credit Suisse ATIs, the additional tier 1 bonds, would have got a higher yield. But in order for this deal to go ahead, the Swiss regulator and the Swiss authorities agreed behind the scenes with UBS to wipe out that $17 billion worth of ATI bonds. And that's really annoyed and really angered the investment community, and especially those investors that are holding those ATI bonds. In order for UBS to buy the company as clean as possible, the regulator just wiped out $17 billion worth of money. So on the Friday, your bonds at your ATI bonds at Credit Suisse were worth X. By Monday, they're worth not Y, they're worth 0. So all of your investment is being wiped out. Now, if that's not some sort of skullduggery or conspiracy or global corporate theft, then what is? For the authority to get that deal to go through, they sweetened UBS and said, you know what? We'll take away any ATI debt and you can just have the company for $3.2 billion, which is effectively what happened. Now that is scandalous. We've seen this before back in 2008 and it's happening again. So this particular banking crisis is bringing out the worst in the regulator and the worst amongst the capital and corporate banking sector. Now the second tier banks, which are in the US, which are things like First Republic, Zions Bank, Westpac, Charles Schwab, Key, Co-America, all of them have fallen significantly because we're waiting to see which one is next in line to collapse. Janet Yellen is trying to calm down the markets and she's trying to give everyone all types of reassurance and confidence and substance that everything's going to be absolutely fine. Well, it's not fine. And whatever Janet Yellen says, you have to take with a pinch of salt because she's been wrong before, as I've stated, on many, many subjects. One of them most recently is inflation. So there's likely to be a much bigger banking crisis in the secondary banking tier in the US. We're now just a matter of time waiting to see which bank is going to fall, which bank is going to fall next, and how much money is going to be needed in order to shore up and pump up the banking sector. Now, realistically speaking, we could be talking here of around about $3 trillion needed in the US banking sector. That's not to mention what's needed in Europe and what's needed in the UK. In Europe, for example, as mentioned before, you've got two massive banks in very serious trouble. You've got BNP Paribas, stated over and over again on this channel, is probably the next in line to fall and will need to be either bought out or have hundreds of billions pumped into it. And the next one, which is even bigger than BNP Paribas, is Deutsche Bank. Deutsche Bank's debt is greater than Germany. Deutsche Bank has been in trouble for years and is likely to fall. Now, if Deutsche Bank was to fall, that would cause cataclysmic effect, cataclysmic response from the financial sector, and could cause a serious meltdown as far as the banking sector is concerned. But it is very likely that Deutsche Bank will need huge amounts of money to support it, and BNP Paribas will also need huge amounts of money to support it. And that money is going to come from probably printing, quantitative easing, buyback bonds, the same style of shoring up the banking system that's happened since 2008. Now, what effectively that will mean is that inflation will go through the roof. Going back to inflation, if we go to Jerome Powell in his speech back in February, the Fed was very insistent, very persistent that inflation is far too high, far higher than they expected it to be. They're shocked and they're going to get more hawkish with rising interest rates. That was in February. Come March, all of a sudden the language has changed, and now they're just going to not raise interest rates. They're going to not worry about inflation, because inflation automatically is going to take care of itself without any further interest rate rises. Yeah, right, really. What's going to happen is they're going to focus on the banking crisis, because they know rising interest rates, increasing interest rates is potentially going to put more pressure on the economy and on the banks and push it into a much deeper recession. Goldman Sachs, which analysts have stated this morning, they expect in 2023 for the average individual investor in equities in the US to redeem around about $750 billion in value in equities throughout 2023. We are at the end of a bull moment. It's called the end of the bull market. It's called a Minsky moment, where the market tops out. The bulls can't make any new tops, any new rises, and the market is going to sink. So any rally effectively is a bear rally, and that's what you've seen yesterday in the last few days. Market jumps up and then it's sold off aggressively. Why? Lack of confidence, fear factor, and knowing that we can't maintain the gains that the markets are holding. Looking at Bitcoin, it's quite a long session this one. Looking at Bitcoin, interestingly enough, is holding itself up at 29,000, a solid positive view there that what's going to happen is that Bitcoin is going to replace the banking system. I don't think so, but there's some people believe that's the case. I can't accept it. This is Meir Velensky with Driving Markets. Have a good day.